What is going on, family guys? Welcome to Digital Goats Academy. It is 9:10 p.m. February 12th, guys. It is the Super Bowl, so I'm actually not going to be on here too long, guys. I know you guys want to see who the victor is for your respective teams, but guys, again, welcome to Digital Goat Academy. I am your host, the Digital Goat, and welcome to my weekly outlook that I do every Sunday at 9 p.m. If you guys find value in my channel, please hit that like button as well as subscribe and hit that notification bell so you guys stay up to date on all my content. Man, I feel like it's been a long time because I was down kind of bad last week, guys. I kind of took a brief intermission just because I had surgery, but who cares about that? Let's get straight into the narrative, which is my weekly outlook. Obviously, the first thing that I like discussing is the US dollar, guys. That is the DXY. Just looking at it, you guys know my premise from it or my overall bias on the DXY. Just looking at it on a weekly time frame, it's still respecting the uptrend, right? So if you guys recall last week or the week prior on the daily, what was that, 4 hour? I pretty much mentioned that the dollar is bullish, and pretty much this is the movement we needed to confirm that yes, the dollar is bullish based off of price action. We do see the dollar obviously bullish. It has filled in this gap right here and has yet to come down. If you look, this was the last area that I had it returning to. I'm not even sure why I drew this area. Maybe on a daily time frame, or there may be a gap up here or something that I recognize. But either way, right now, if we're just looking at it, guys, price action, the dollar is bullish. Not saying that conditions can't change later on tonight or throughout the week once we get into London session, because we know we have a lot of currencies that aren't open yet because we're in the Sydney and Tokyo market session. So once we head a little bit later on to pre-London, London, you start seeing a little bit more movement, maybe recoveries, things like that. But overall today, I am bullish on the dollar. I would like to see a recovery somewhere down here into this consolidation zone. So right now the dollar's at 103, right? If we were to have a pullback and based off the momentum, because you guys know I'm very keen on Hakanashi. Based off the momentum, it doesn't look like we'll get that pullback maybe later on in the week, but the dollar right now, it's consolidating and actually still in the uptrend, guys. So just siphoning through the smaller time frames. Man, yes, this is good. This is good news. We want to see this. Yeah. So start of bullish momentum just based off of the Hakanashi candles. I'm liking what I'm seeing so far. Now, this is I'm gonna use this information in conjunction with USD Japanese yen, and I'm actually going to go into the yen, guys, because I think that's important for people to understand that the Japanese yen, the Bank of Japan, they just had a change of their governors, so they have governors for like bank jobs and stuff too. I'm not sure like how in depth they are when it comes to. I mean, obviously they're a big figure when it comes to the bank, but normally you would hear like a president of a bank. So I'm assuming that that's the equivalent of a president of a bank. But anyway, they just had a transition or a change of command for anybody, my military guys out there. They passed it on. The last guy, he resigned. He was older. He was at pretty much the end of his lifespan as far as like him working. They had another guy that was supposed to come in, so there was a lot of talks, and then this other guy got nominated. So right now, because he's just the new kid on the block, you'll probably have some negativity within the Japanese yen, and I'm gonna go into that a little bit more, guys. But let's just look at UJ before I go into the Japanese yen. Now, UJ, if you guys always follow me, I mentioned a Sunday candle. I always mark the Sunday candle if I catch it for that currency pair, right? This is universal. You can use this for any currency pair other than like cryptocurrency, just because I haven't done the back testing for this, guys. But right here, if you see, this was the gap, right? And this was all last week. Last week, we pretty much ranged, just messing people all the way up, guys, myself included. The market didn't make any moves. So as long as you were a scalper last week, you were straight when it came to UJ. If not, if you were looking for big intraday trades or swing trades, you probably got bust upside your head because you were probably in the wrong position and you probably didn't get out or take profit when you should have, right? But right now, if you guys can see, I hope the Sunday candle isn't distracting you. Right now, we're in a bullish trend, guys. What does that line up with? That lines up with the DXY that we just saw, the dollar index. So if you're following trading, for all my YouTube viewers out there, that's in another country, you need to focus on your country's currency because you can take advantage of what may be going on in the economy. It will tell you a lot, guys. Trust me, it will tell you a lot. But anyway, we're bullish. So always mark the Sunday candle because what I want to see is if the market between today and all the way to Wednesday, will the market remain above this candle? So there's two things that can happen, right? Well, really three things. So I normally look for, because it's Sunday going into Monday, I know that it's going to do a deeper retracement than what I would like to say, like as far as like a shallow. So if we are continuously bullish, so say like the market is still bullish, right? What we should get towards like London or maybe like 5 a.m. in the morning, guys, we should get a pullback about 50%, if not 100% of this candle, of this box right here. So I'm going to zoom in so you guys can see this box. So of this box right here, this is what I always mark with the Sunday candle, guys, and I try to get it on par as much as possible. Now, I will recommend that you guys that use obviously TradingView to form your bias, you draw your Sunday candle box on your actual MetaTrader 4 if you don't have a phone version. If you have the desktop version, definitely orientate yourself with the market using your own personal broker. So find this imagery and pretty much look at it the same direction, guys. So if we're still bullish, we should get a retest either 100% and it could dive a little bit deeper, or 50%, guys. Should be no in-betweens. If it blows through that, we have to say that, well, one, that violates the pattern, but it also signifies that we may be not as bullish as we think, and we may need to come a little bit lower before we actually start rising. Y'all understand me? Y'all following me? So we should see between, if we're still bullish, we should see price come back to 131.275 or 131.100 or 114, anywhere in that ballpark area for a potential buy once the market, finishes pulling up. I do expect that it'll probably push down like after it, continues moving up. But again, guys, there's a lot of uncertainty in the market today, specifically just because the Super Bowl is going on. So I don't know how the Super Bowl may impact it, but I do expect it to impact it. So I would like to see it like, come up a little bit higher and then maybe push down, into this zone and then pop up. But like I said, just like we saw with the DXY, if you turn it to the Hakanashi candle, should see the same thing. Bullish momentum. Now, the only difference is that this, let me double check to see. This is not a flat bottom. So your first momentum candle is right here at 9 o'clock. That's your first momentum candle. So that candle is still open for the 4-hour time frame, but if we maintain that close, we should see more bullish momentum to the upside, guys. Just pretty much clear as day. I mean, if it breaks up out of the zone, when you just look at this consolidation piece right now, if we turn it to a line chart, we're already at resistance territory and we broke above that. The only thing is that we just need to push up a little bit higher and then return into it. If we return back into this resistance, then we know that we may be retesting lower or we may be up to a reversal, if you guys can spot that. Let me change that to a different color. Where is my colors? Why are you not? Whatever. Make that black just to kind of. So this is our consistent resistance that price has no doubt broken above. We want a shallow retest on this 4-hour time frame to bring the market up, and then possibly another retest to signify that, yes, we are bullish from this point, knowing that the market could drive down deeper. But if it does, obviously, we don't try to enter in this zone. If you've already entered, obviously, you're good, but we don't try to enter in this zone until it hits to one of our points. And the one thing that I want to show you guys is that, okay, from this point all the way down to 100%, this is where it depends on how you're going to trade based off your lot size, your account size, so forth, so forth. So between the 100% and 50% mark, there's about a 16 pip difference. So you have to make a decision on how you're going to be moving if you do enter this trade continuously for the buy, guys. But again, if news just straight slaughterhouse this thing down, we know that we're bearish and we'll pull back somewhere either at the bottom of this trend or back into this candle, guys. I'm telling you, this is foolproof. It works. It's not like a guaranteed percentage, but it at least helps you know when you're in the wrong direction, and then you can recover whatever you lost using this methodology, guys. I'll go more and more deeper as the year goes on to really break down how I use this. I like to say technique. I don't like to say strategy. That really irks my nerves, but how I use this technique to, and it's not for you to be trying to Hail Mary the market. It's just for 35, 25, 30 pips. Again, guys, percentages, how you're growing your account, because we know we're going to automatically grow to 50%. We're just trying to manage what we lose. We want to only lose 2 to 3%, maybe stretch 4%, but that's depending on how your what your account size is, right? So right now, like I said, I gave you guys plays. If we do have a return later on, early in the morning during London, it should be around this zone, guys. So I gave you guys the zone for all my YouTube viewers. Just take that into account. Make a decision when the market decides to retest there as low as possible. I mean, when it decides to return there, guys. So Japanese index, right? Japanese index. If you see, now we do have a gap that the market needs to come back to, but understand indexes work a little bit different than your conventional, regular Forex pair. Indexes, you might as well treat them as like stocks. They take a while to recover to their gaps. And not saying that it's going to take forever, but based off of what we have right now, nothing saying that Japan has to come back to this gap. But we know it should eventually, just like it did right here. So if you guys see right here, that was a gap that the market did attack. I wasn't even trying to rhyme, but bars, yo, bars. For my people that's on the call, bars. But anyway, it pretty much grabbed this liquidity right here based off this gap. So it should sweep it until it's ready to pull back down. I know the yen was trying to recover, right? So I actually expect, well, no, I actually said that backwards, because if it swept it, it should actually try to attack this gap right here based off of what we're seeing. So again, we have negative news only because there's been a transition between these big positions when it comes to dealing with their money and stuff, right? So right now, because there's uncertainty, how well is this guy going to do? No different than probably like our presidential election in the United States, guys. Until they've actually done stuff, you have to accept that it might be negative because they haven't done anything to prove themselves. So right now we should see, like I said, we should see some negativity. So I'm glad I did spot that, because more than likely the Japanese index, once it actually breaks out, it'll probably come and recover that and then make its decision on where it decides to rise from there. I know the Japan yen has already been in like, a position to continue going down, guys. Like they just hit their recovery stage. So nothing says that they might actually, recover to a more positive sentiment, which would make it bullish. So you just have to play price action and any news that may govern that. So right now, based off of price action, it is respecting what my bias is, where I would actually want it to come down. And we kind of need that. This was the area that it broke out. We actually needed to come back and retest this if it's continuously bullish. But when you just look at a lot of these countries' currencies, guys, just overall, they're weak against the United States dollar, like super weak, super weak. Everybody else was was already in a recession with the talks of the United States dollar potentially, or the United States potentially going into a recession. Again, guys, I still stand by my opinion. I don't believe that we're going into a recession at all, completely at all, guys, not at all, right? Let me see. Yeah, I don't believe we're going to a recession at all. So again, we'll see with the data, but what I'm looking on for UJ, I think UJ pulled back a little bit. Should have took that money too. I think it just hit one of my stops. Yeah. But, you guys got what I said. If it decides that it looks like this is the move that it actually wants to start coming back down. So I'll pretty much wait for another entry But again, guys, I gave you guys my overall entry, and let's just kind of look at some stuff. So my premise on like US 30, um, I think that it's going to be selling once it, pushes up a little bit more, or pushes down, like pushes up a little bit more to recover, guys. I think that it's overall selling from this position. You just look at it, it returned back to this previous low. We don't know if like, during the morning, that's why I don't trade on Mondays anyway. Price may spike up higher than anticipated, but this would be this area. So for all my US 30 traders out there, this would be that window of where you would probably be looking to sell. This market is overall like it's ranging, but we haven't had a breakout to the downside. But I know that within Bloomberg, they had a lot of talks about like, don't be completely bullish on a lot of these stocks, because if you just look at it overall, guys, for what we know as traders, overall, we should have some type of recovery. Nothing guarantees that we're going to create a new high, but we should have like some pullbacks to at least try to create a new high. If not, just pull back for a recovery to create some strong support or, a previous high. I can definitely see in US 30, if it decided to buy within the 30K area, like 30, like 3,900, 3,800 within that area, if we were still bullish. So yeah, I would definitely like it to sell from here, guys, but we'll see. Overall, I don't really mess with it during the day. I mean, during the early beginnings of the week. Same thing for US oil, guys. I'm looking for US oil to actually be bullish after we do recovery phases. So right now it is recovering to areas that I definitely like. So this was an area that I was looking to buy, knowing that it could push down a little bit lower. We'll see overall what the market does, again, going into London. So yeah, I like what I see overall, guys. I'm still strong on my bias for the dollar being bullish. It's just about when it's ready to recover. Because again, if we just go back to the dollar index, you'll see where it has a lot of imbalance in the market that it needs to come back to. So there's a lot of imbalance right here, but nothing guarantees that we'll even see that this week. What I will say is that if we do come back to this imbalance, it'll probably be somewhere during like June. Man, I can't believe UJ just did that on me, or whatever. It'll probably be somewhere within June, guys. So yeah, 9:30. Yeah, that was about a 20-minute session. Not much going on, like I said, guys. I mean, if we just look at it, I know one of my partners wanted me to look at gold. Same thing with gold. Probably coming down. Yeah, definitely probably coming down. It's returning back to this channel. So I definitely see gold coming down. It just depends on if it wants to come back here and collect some liquidity like within this zone before it pops down. So just be like careful with that stuff, guys. But overall, the direction of gold is down. So yeah, I think gold is going to sweep through all this after it's done playing around within the zone. So Sunday, Monday, we know what that brings. Sunday, obviously, Sunday night going into Monday morning, guys. Only scout, get your money. Don't even let yourself go and draw down that bad. And then just look for better opportunities later on in the week, like Tuesday, Wednesday, Thursday, guys. That's just the best narrative. So you can get those long moves or long shorts that you're looking for. Overall, guys, there's too much inconsistency and not enough data has flooded the market to create a true bias. So you're always going to be fighting against the market, and it's better to get in and get out than you over here try to struggle to make, whatever you're trying to make for your daily income, guys. So appreciate you guys as always. I gave you guys my narrative. If I'm just looking at cryptocurrency real quick, Ethereum specifically, I am looking for it to pop up, guys, but we'll see, because as you just saw, it's showing kind of like a little bit of signs of like gold. But we'll see if it breaks through this area, then yes, we are coming down to produce a downtrend. But I think that we'll get bullish to at least come back up here and create a new level of resistance. And then if we're bearish from here, because this is cryptocurrency, if we're bearish from here, we'll probably have another sell-off in like that 16, like this is for Ethereum. So the same narrative could be true for Bitcoin, guys. If we come back up here and we're bearish, if it doesn't blow through, then yeah, we'll be looking to sell like around the 1600, what is that? Yeah, like 1680, 1690 area, maybe 1720, just because that's how high this wick was. So just within the 16 to 1700 range, and then you can sell off from there. But you know, just play price action, guys. Everything like kind of tells you what's going on once it starts forming these candles. So all you got to do is stick with a bias that you generated, stay with the trend, and everybody should be straight, guys. So I hope everybody has a great trading week. I hope whoever your team is, you win the Super Bowl, guys. And for all my betting guys out there, man, y'all make a lot of money doing that. But appreciate you guys as always. Again, hit that like button, hit that subscribe. Make sure you guys hit that notification bell so you can stay up to date on all my content. And again, guys, as always, see you guys at the top, because I promise you we're taking everybody to the top with us, man. It is the Digital GOAT. I will see you guys Tuesday evening, man. Have a good day.